Good afternoon, everyone. Welcome to the PivotBoss Monthly Market Outlook for December 2021. Today is Wednesday, December 1st, 2021. It is the last trading month of the year of 2021, the last month of the quarter. And we have a lot to cover here today. We have several stocks to cover. We're going to cover some key futures markets here. We'll even look at some crypto. If you have any chart or ticker you'd like me to look at, please put it in the chat there, whether you're in our trading room at the EchoFin trading room or whether you're in the Zoom webinar. I'll be monitoring both chats there, so if you populate a question in there, I'll be able to read it. If you have any stocks or any tickers you'd like me to take a look at, please put those in there and I'll get to them when we have a shot. If you're new to PivotBoss, welcome. My name is Frank Ochoa, also known as Pivot Boss. I am author of the book Secrets of a Pivot Boss. It's a book that I wrote, over a decade ago, that continues to get great widespread appeal from traders all over the world, whether you're newer to the market or whether you have great experience. This book really gets you some great tools to work with that really help in various types of markets. Some of the new tools we've developed since the book include my PivotBoss suite of indicators and tools, included on PivotBoss Pivots, PivotBoss bands, ADR targets, and things of that nature. We'll be talking about some of that right here. Today, we're going to go ahead and get started right now with just kind of a look at how today finished. If you look at this right now, we're in a 60-minute time frame right here, 1 hour bars. And so each of these bars is 1 hour. And you can see over the last several hours of the day, we saw quite a bit of selling pressure that intensified with the last hour of the day. That's a tremendous sell-off there in the last hour of the day. It kind of sat there right now after hours sitting at these lows. But a significant sell-off here that we've seen as my puppy dog here barks a little bit. Seeing a friend in the front yard. If you see right here, again, incredible selling pressure to finish the day. It was one of those scenarios where the early overnight strength and the pre-market strength and the early RTH strength was sold for late day weakness and a very hard crushing push through the previous week's low and close prices. Significant moves here and a big time drop back down. We are now at 4,500, which is a important key level in the chart for the ES, and we'll talk more about that now. RTY, crude oil, all of these selling off as well, and we'll see what that means moving forward. So let's bring over a higher time frame look here of the ES. There we go. Number one, we've been in a very, very bullish trend. These are the March 2020 lows, straight up into the end of the year, and then this is 2021, a very clear uptrending channel. Almost too good to be true. So many headline risks, so many different headwinds, inflation fears, supply chain issues, other kinds of things, but this thing keeps on ticking. Tremendous strength overall, very buoyant market. You can see right here, great lower trend line, great upper trend line. And one thing that we're seeing right now is a flow downward within that channel, and we're not quite done with that move down. Today again, you can see here the daily bar, early strength this morning sold, and late day weakness to close on lows. That day right there, the range of which is huge. Today was a 243% of average range day, 153 points of range for the ES. That's huge. If you look at just the last week to 2 weeks, look at the volatility and how it's increased. That's the 5-day average range right there, that yellow line. This gray line is the 10-day average range. A tremendous spread over the last 5 days as this has occurred. Last Friday, which was a holiday shortened day, was the biggest of the bunch here. Actually, today was a little bit bigger by a few points, but a tremendous move. Here's the other thing. And for those of you that watch my pre-market videos, first of all, thank you very much. One thing we talked about here was the higher value relationship that was going to develop heading into this month. and which developed here with a negative bias, a bearish bias. That means that you have a higher value relationship, but for the close of the month, it ended up closing weak. That right there tells us that any early move to begin the month to the upside could be seen as an initial opportunity to sell it for a push downward to new lows through the previous month's low. That's why we talked about this level during the pre-market video today, 46.50. Today's high 46.75, and it ripped all the way downward, hitting 4,500 on the low of the day. Tremendous range, big time move, and it all started with this higher high failure, bearish outside day, then you had a lower high, bearish outside day, down, and then you've seen this thing continue to sell off. So clearly we're not done yet. We have more downside to come likely. How much more though do we go? And 4,500 is a very important level, short term, nice round number level. Number one here, you have this key range high though, that's 45.50. So that's the key level I mentioned earlier this week, that if we drop through that zone, can we reject prices below it? Say below that key level, below the previous month's low at 45, and then push back above that level soon. If so, we might be done and we could be headed higher right away and all is good. If not, and tomorrow instead we see early overnight strength, pre-market strength, and then the RTH happens and boom, we sell off, then we could be looking at quite a bit more sell-off ahead toward the lower edge of that channel. So right now, the way this looks, it appears as though you don't get just 1 week of increased volatility. You tend to see 1 to 3 weeks of volatility. For example, you see, one big wave here, then week 2, week 3, and then by week 4 you're shaking out. So this is only the beginning of increased volatility that could be in play. Now keep in mind we do have the end of the year, which in the last 2 weeks of the year, volatility and volume both tend to dry up a bit, and that tends to favor kind of a modest push higher. Some sort of phase here that you don't really want to sell into that weakness because it just tends to grind up. So a melt up phase into the end of the last 2 weeks of the year. But if this market is ripping and breaking market structure, then there's nothing to say we can't sell off. Basically, when you look at 2018, this right here was December 2018. And it started the month with an early push into the pivot range and sold off and just got crushed and only bounced into the end of the year after the sell-off. So we could certainly keep selling off in the near term. I would say, again, this lower trend line, while I'm not in love with trend lines because they're super subjective, they do give you at least a spot to kind of eyeball. And that spot right here is about 44.20. 44.21 is the midpoint of this key range, and if we're giving it up, then we might drop into the zone, find some sort of low, and try to rotate higher into the beginning of the year. That could be a play ahead. So that means we might have a little bit more weakness up ahead. We have some stocks to watch here that could be coming into some great buy zones, and ideally we'll see some sort of responsive moves after these deep sell-offs. So can we get a little bit more weakness? Can we find a strong low? Anything like this, can we build off of that low over the next few weeks? That could take us up here toward 4750 to 4800 from, say, a 4400 level. Right? So somewhere in that zone could be an opportunity to fade it back up, but we may have a little bit more downside first. So this is the key range we'll be using right there. That high and that low of the September impulse sell-off back to the mid. That's 44.49 half, 44.21s, and 42.93s. Basically, that's the key range right there, and a little bit more downside. So from a intraday perspective, day trading perspective, tomorrow we have to see how much or which way do we go first. Do we kind of bounce in after hours trading and rally a little bit? If so, that could provide an opportunity to sell it. Again, we're averaging on a 10-day basis here 74 points, and on a 5-day basis 106 points. So say we just go the very basis of, say, 75, we could have a 75-point day tomorrow. And if the early move is to the upside, find the morning high, and from that morning high rotate lower 75 points, and you have the target. So what if price rallies tomorrow, say into 45.30, 45.30, and take away 75, and you basically got your target somewhere around 44, whatever that is. What did I say, 44.30? So yeah, you're looking at around 44.60s, 50s, somewhere in that zone from on the way down. But again, this hypothetical, wait for that strong top in the morning or that high, and then point down. Now, if the overnight move is down first, and this thing sells off hard overnight for some reason, then we might find some significant low here, in which case we can bounce back up ahead. So several ways to go. I detail it also in the afternoon session of our trading room today, which the recording is already posted. So right now, watching to see how it plays out tomorrow, but quite a bit of selling pressure, and any pullback could be seen as another round of weakness up ahead. 44.21 could be the next downside target. But again, after this thing wipes out, do we get another shot at rotating this thing to new highs early in Q1? Now looking at NQ, very similar price action, very bullish overall. This one has had a tendency to see wider pullbacks this year. You can see this was a bit wider, this was a bit wider over here, and now we're starting a new one. This pullback again could get us down toward the lower portion of this range, at which point we find some lows and maybe rally into the new highs here for Q1. So you have the current quarterly high that's developing here. We may go take that out, and 17K might be the new target. So a 15.2, this thing drops into 15.2, maybe 15.2 opens up a move to 17, even up ahead down the road, just based off of this move. So 15.2, big time level down below. Will we go down there and grab it? Again, when we have formed a good top and rotated lower off of it, we've seen some pretty good rotations already this year. Do we get one more? If so, that could be a great buy. At the very least, let's look at this by zooming in a bit. You have this low, you have this high right there, and that midpoint, and that gives you a new key range. And today we close below the low of that key range, and we are now approaching the previous month's low after taking the midpoint offer today and taking the midpoint of the key range offered. That tells us we're at least going down here and grabbing this zone tomorrow. We're at least going to go get the previous month's low. We're at least going to go test that previous quarter's high. That puts you somewhere in the 15.7 to 15.8 zone. If you look down here, big time averages after this thing has increased in volatility over the last couple of weeks, but we're now averaging 325 to 420 points per day. This is a 10-day split right here. This is a 5-day. So over the last 5 days, 420. Over the last 10 days, 320. So it stands to reason that tomorrow could be easily between 300 and 400 points of range. Again, if we rally early in the day, say we hit 16K, do we drop off of 16K into 15.7? Right? That would be your +3 right there. So, do we get 300 to 400? How we'll see. But so far, price range has been increasing over the last 2 weeks tremendously. That would suggest we at least get the lower end of the range, 327 tomorrow. Which way will it be? What if we come down here first and hit 7 first and then rally? If we put in a strong low at 7 first, then look up 300 points, and you got 16K to 16.1 as your target zone for the day. So those are two ways to play it here tomorrow as a day type of idea. It depends on which way this market goes early on. Now, the tendency here after a hard sell-off late in the day lately has been to bounce back the next day. Fade after trend day. That's what we usually take, right? You get this sell-off this day, then you may bounce back the next day. We see it quite often. So if we can find an early low in the morning, there could be a bounce back fade after trend day type of opportunity. Again, plus 300 to 400 tomorrow in the NQ. If we see a wider pullback, remember 15.2 might be a great zone to watch. Now, I do want to go back and just take it back to the beginning of October. This is the December outlook. We did the November outlook, and this right here we did the October market outlook. For the market outlook in October, that was the beginning of the new quarter. And what we mentioned was if we can just wipe out this quarterly low, say we drop into, and the level we talked about before was 14,250 to about 14. If we can drop into this zone, ultimately, that could be the best buy for a target back to 15K, which was here, and 16K, which was there. That trade ended up working out in the first 6 weeks, although it didn't really wipe out as far as we thought it could. It got to about 3 something. We thought at the very least it might push down to 250 before it recoils, but that's been a tremendous move already. Now what's going to happen heading into the end of the year, right? That's the next one. Are we going to see the next pullback again into some key level here that allows us to get this thing going back to the upside? And in order to do that, again, you need a good little discount here, nice little markdown phase. Is this the beginning of that markdown phase? This key range right here would forecast a downside target here at 15,025. That's your 100% target. So we close below that key range low. Again, if we open with strength and bounce off of 16, the 16 give us plus 300 to the downside, and then over time get us all the way down here to a 15K target. So we could be looking at a bit more pullback here up ahead. Tomorrow will be important to see how the market handles today's late day selling pressure. Here's CL. CL has been tremendous, but one of the things we talked about last month was this pattern, which you don't hear me say often, but it depends on what the market's doing. When we did the monthly market outlook in November, it followed this weekly bar right there. And I called it a spinning doji, kind of a spinning top doji. It's not a perfect doji. It has the tail at both ends of the range. But what I mentioned was this could be indicative of a pullback to come, just because of that range forming at the highs of this move. And I pointed to this one right here after this rotation up, and I also pointed to this one right here after this rotation up. So it was very similar. And here we see in November, it was perhaps the biggest monthly range we had seen in a long time. This thing lost altitude of 21 points. 85.40, 64.40, 21 point sell-off. And it started with that spinning top. Again, you never know how it's going to work out, but one thing I usually say, and it's written in my book as well, is that every day is different in the market, but many days are a version of a day that happened before. These were very similar days, or weeks in this case, which led to increasing weakness each and every time. So significant play and move there. Now that this thing is flushed out, number two, let me go back one step here. You see this thing started the next week here on a push up, and this was a failed new high against the previous week's high, and it closed lower, sell signal. Here's your pullback, sell off. So say like today ended like this. This is what I'm talking about for tomorrow, is like what if we rally like this, we find the top, and then you sell off, right? that's what we're looking at tomorrow in the case of additional weakness. What if we rally on this day or this week? This is a week, but you rally early and then by the end of the period you're down. This is what we're looking at tomorrow for the broader market from a day-to-day basis if it starts higher first. If we drop down and reject first, then we could be having a much more thrusting type of recovery back up. But this one sold off tremendously, and it started with that spinning top. That's the one we mentioned last time around in our monthly outlook. It turned out great. Now what? Now what? Well, we just broke through the previous quarter's midpoint there after taking all the other quarterly measures offered. That right there was quarterly R25, and it was the top. Well, this is the only level left to go test, and that is the previous quarter's low. It's been a very long time since we've tested a previous quarter's low. The last time, coincidentally, was Q4 of last year. And when it took out that low, it's triggered the next wave of strength that's continued to be present in the market for the most part. So this might be the next opportunity to find an opportunity to buy it cheaper and look for this thing to rally up ahead. I think we're in this expanding type of wedge from a long-term perspective, and as soon as we wipe out the last bit of this, we might be rotating all the way back up. Another thing, again, themes we've continued to touch on, but there's so many different forces here pushing and pulling on price, but inflation fears continue to permeate, and the expectation, at least from the Fed's testimony or from Fed Chair Powell's testimony the last couple of days, is that we may see this thing continue to linger into the mid 2022, right? If that's the case, do we continue to see overall strength in commodities in general? So if that's the case, again, if we wipe out here, this could be a great opportunity to push this thing back up toward, again, as inflation continues to rise toward mid-2022. So with this one, tremendous sell-off. You never really think it's going to do that, but it does. And the two levels we talked about at the time, if you recall in our trading room recently, is if you fail to hold the key range top of 75.50, then we will go to 70.27. That's the midpoint. If we fail to hold that, we will go to the lower edge of the range, and that's 65.02. Just incredible movement. But the range on a daily basis super wide, on a weekly basis super wide. You got to be very careful. But I think on this one, you wipe out into 60. I think it might be worth a shot back to 85 and higher, just from a directional basis, week over week and month over month. So almost to that point where it's fully wiped out. Another one we talked about here recently was SI. Again, this one had bounced off of the 22 level here. We caught this one as well at the beginning of the quarter and mentioned that the first target on a move would take you to 25. So initially you're rejecting this 22. So here's the big level we've talked about and had as a buy signal several times. At the beginning of the October market outlook, we had this reaction, and on this portion right here we mentioned, okay, 22, if it holds 22 right here this week, you got 25 as the target. There it is, 25 chosen as kind of that middle portion of the range, and then you could potentially go across the range from there, and it just didn't. It hit that 25 and just cratered all the way back to 22s here now. But this one here, again, showing initial burst off those 22s. We're back at it now, and we're doing so with a giant rounded top. Is that going to open up a move into this portion of the LVM below? The way it rejected hard off the 25s and the 200-day, and there's your CVWAP, it almost looks as though it wants to make that move downward. So I would hold off on 22 this time around, unless you see a significant rejection like some of the ones we've seen before that occurs. But until then, kind of hands off on this one at the moment. I wanted to talk some Bitcoin here and Ethereum. Bitcoin, obviously tremendous growth over the last year from Q4 to Q4, year over year. The one level that's been an important level here this year was 29 right there. We talked about it early in the year, here and here. We talked about it there, and here was the last time where I actually thought it might break, and it didn't. That 29, tremendous. Big whales defending that level, something we talked about in our room here. I believe just yesterday, a new article coming out, Michael Saylor's MicroStrategy, buying 7,000 more Bitcoins, adding to their stash of about 120,000 Bitcoins, with that have an average entry of, you guessed it, 29,000. So that is the level to hold, and it's nice to connect again whales to price levels, because if price were to drop to 29 again, they're going to buy it right back up at that level and defend their average entry. At some point or another, sometimes they will let it push through so that they can improve their cost basis. But for right now, that's been a tremendous level, big time hold. But are we done to the upside for now? And it's hard to say, hey, this thing is done, because at any moment it can tend to rally to the upside tremendously. But there's a couple of things I want to point out that say that this thing could be, at least in the short term, rotating back down. And how far we go could have implications for the long-term potential return on a buy the dip opportunity. Because again, if you're one of those that say, okay, this thing could go to 100K down the road, and some think it could go to 100K by Q1. Some think it could go to 100K by the end of next year, so give it a year, by Q4 of next year. Right now we're at 57. It's almost a double to get to there. Just from there, if you got to 50K, which is a great line in the chart and near value, that is an exact double. Will that happen? Or do we kind of rotate back down and make the move again? Again, I think it would be worth looking at any kind of reaction that may occur below 50, because right now 50 has been the level. 42.50 is kind of that middle level right here, so you have 42.50 about right there. So if it can't hold that zone, it's hard to see this thing going below 42.50 in the short term. It just turns around so strong and has been on a line. So right now in the near term, the thing's pointing it lower. Just technically speaking, right? Just technically speaking, is the fact that we have a higher value relationship overlapping for this month, but a bearish bias on the close, which means any strength likely sold for a move at least to this low. That just tends to be the tendency. We saw that play out right now already in the ES. The NQ could hit that low next tomorrow by the morning. So this is the same type of price action. You have an overlapping higher value. With a bearish close, you tend to go down first. It's what happens about right there which will really tell us a lot. Does it fail at that market structure and open up a rotation to this zone? If so, 42.5 might be a great opportunity to defend for a move up. You have this great range for next quarter. Again, do we get a shot to come down here and trade off the quarterly low? Because that could provide a great opportunity across the range. So from a short-term perspective, there may be a, say a 1 to 5 day meltdown ahead if price continues to stay below this level right there, and that's the previous month's midpoint. So theoretically, we could rally as high as that and still see selling pressure. Already the first trading day of the month went into the pivot range and dropped back down. Maybe we make that move. So we might see him push down towards, say, 53, 52 here over the next 1 to 5 days. But do we get a bigger pullback from there? I think if it hit 42.5, that might be a great opportunity here to take out that quarterly low from a long-term perspective. So this is kind of an add back from a longer-term idea. Again, anytime you're working with these coins, you got to be very careful, even the big ones, because you get in at the wrong price. Say someone bought here last time it's a hard hold all the way back down and trying to get it back. That's painful. So you definitely want to be in near the right spots. We've had some very good edges here in this one. We've gotten away from those. But perhaps a little short-term pullback here could get things going back up. And from a longer-term perspective, I think that zone right there is huge. The quarter's low, previous quarter's low. And remember, just like some of the other ones, you don't hit a previous quarter's low very often. You know, there's one right here, there's one right here, and it missed it here. It missed that one there. This is the high. There's the low. So you don't get them very often. So if we're fortunate enough to see something in here early next quarter, that might be the go for a major longer term entry. So this one has a little bit more time before it may become kind of a longer term in. But short term, the rotation is down toward about 52, 53 over the next week perhaps. And then we'll see what price is made of in this zone. As you know, crypto can turn around super fast. So if this thing pushes through 60, you know, these recent highs, nothing to say we can't pop right away. Higher high failure, kind of like what we saw in the NQ, kind of like what we saw. Even Crude was a triple top, but ES, NQ, they all had higher highs and rotating lower. Very similar format right now. So more weakness in the near term perhaps, but watching for signs of a bigger opportunity down the road. Ethereum, here's Ether futures. We have the micro Ethereum here coming online. I believe it was mentioned the 5th, December 5th, Sunday, which was awesome. The specs were posted in the room. Thank you, JP, for posting those. I did add those to the pin board in case you missed it. But yeah, we got ourselves a micro contract here for trading purposes. And then again, we have some potential levels here from longer term ideas as well. This one, again, just hasn't gotten those previous quarters lows. Ironically, the current quarter's low is actually the previous quarter's close as well. That's how much this thing just exploded right at the beginning of the quarter. It came very, very short to taking it out here for the all-in idea earlier this year, and I'm still kind of smarting at that miss. But it you know, again, those are the types of opportunities that can tend to happen at times when you're near the quarterly low. We're not there now, and we're closing near the quarterly high. So, you know, this one right here is in its own little range up here. You can see this kind of D shape that's developing. Next quarter, you have this range here that's in play. You know, do we get a little bit of a pullback and hold and build energy and go? With this one, again, based off of just pure price, if we were to pull back to a market structure area of support, like say 2,800, that could easily, I mean, again, do we get that low? And, you know, we're looking into next quarter as well. We never know what can happen. Right now, we are clearly on the way up. And as long as we hold 4K, we're still on this path. You know, it's not going to surprise me if we don't hit 5,600 right away. But if we come down here to this major support and see 28, 28 is your double to 56 on a longer term basis, right? However long that might take. So that's a really good opportunity right there, just from a pure price perspective, because this thing continues to work its way higher. Again, the difference between some of these coins is huge, you know, from Shiba or you know, the Dogecoin, I mean these dog meme coins that can go up and down tremendously, whereas others like Ethereum, Bitcoin, and Ripple, some of these others are actually having their technology implemented in some of the larger corporations and being a framework for what's to come down the road. That will continue to boost the valuation of these coins on a longer term basis. So the trajectory remains up. From a longer term perspective, would love to see this thing pull back a bit, even if it's just 28. 28 would be a double to 56. And if it's below, and if you have 28 and it tends to, and it crashes, then it's an add back off of the low edge of the range, improve your cost basis, and allow it to work its way higher anyway. So I like 28 as a key level to watch, 28 to 3K if we were to see a longer term pullback. But right now the trajectory very strong, and as long as it holds 4K, we're likely going to crest 5 very soon. I mean, today was 4,900, so very strong overall. Just wanted to provide at least a couple of longer term levels here for down the road. All right, wanted to talk some stocks now. There have been a ton of stocks that are dropping tremendously. You want to see some stocks free falling, you know, something like a Zillow, for example. This thing is trading 53 bucks, sold off from a 210 print. That's a hard fall, right? And obviously there's reasons why for this one, and we can get into those or not, but for the most part it looks like it's going to continue to bleed out a little bit more. So some of these have sold off tremendously. I mean, this is a huge 210 to 50. I mean, come on, that's just ridiculous. At some point you would think a bounce is coming back, but some of these will likely bounce faster than others. So a Zillow, for example, not super excited about the potential for a bounce there right away, but it could happen. There's others that might be better. Some are speculative, some are not. Let's talk about a couple here. For example, here's Peloton, and some of these are ones that we focused in on the room here over the last week, because it's getting to a point where we're close to those initial entry zones that we talked about before. And last month we had $40 as the entry for a Peloton, with a target that could be as high as 130, you know, going back all the way to this high. But, you know, we're not shooting for a 130 target all the way up there. It could go as high as that. The targets that make the most sense right now is 80 and 100. 100 because it is the HVN of this major market distribution. So it is value from this market composite, micro composite chart right there. That's value. So at some point you may snap back to value, and even from current price, that's a great return. The other idea here is that when you break market structure, as we did here at $80, great support, great support, great support, and you break it, you drop until you go to the next lowest market structure zone, and there's your LVN there, and that again is between 37.5 and 40. We've gotten so close, and we're almost there. That's also right near the top of the pre-IPO range, or the IPO range, where it kind of just doing its thing, and then you see the massive growth, right? So this thing is sold off all the way back. When you go all the way back through a previous market distribution, and this one it rallied through that distribution, there's a tendency to bounce off that point and go right back up and maybe fill in this zone. So the new market structure may be between 37.5 and 80 as we kind of fill in this lacking portion of the volume profile. So again, we're very close to that $40 level. 37.5 might be a level you might be able to hold out for. So if 37.5 comes into play, right, we're looking at a move that takes us just shy of 80. If we get in at 40, then we're looking at a move that takes us to 80, which takes our target somewhere between 75 and 80 for a double off of this pullback. Again, with opportunities like this, you want to put in an amount and have a plan in place to execute so that you're not using emotions as much or they're getting in the way. For example, what if price comes to 37.5 and you're in, and then price drops to 27? What do you do at that point? So for me, there's always an add back opportunity to improve cost basis for these what I call active investment opportunities. This is an active investment. It's not a swing trade where we want better precision and we want a highly identifiable move over the next several days. this is an opportunity that, you know, if you buy it cheap here and you wait 4 months, 6 months, you know, 12 months, where is it by then? It's going to be somewhere up here in all likelihood, unless they wet the bed or some manner, right? Unless they mess up and they just continue to, you know, whatever. Anything can happen. So always know that. The other thing is, again, put an amount there that allows you to sleep at night and you're not over risking in that case. Spread the bets out a little bit. This is one of those ones where, based off the market structure and based off the potential return, we may see a 100% return on this one from 40 to 80 or even better. So some thoughts on Peloton. Another one I like, this is another speculative idea, a speculative trade idea, and we've had many different speculative ideas on this one because it's given us one tremendous level to continue to watch, and that is $15. And so yesterday I mentioned, hey, this might finally be the day where we drop below 15. To begin the month, it may wipe out, and if we get to anywhere between 14 and 15, there could be an opportunity to buy in on this one. And the goal, again, if you're in, say, 1450 tomorrow morning, you're in at 1450. Obviously, with these speculative ideas, for me, you're looking for an opportunity to bring it back to value. Where is value, and how do you identify value on the chart? And you're also, in many cases, looking to take it to a spot where you can take out your investment and play with house money. So, for me, again, that's a double. We've seen that this thing can double, triple, quadruple. Last time we had this as a buy opportunity was here. It hit 15, quickly went to 30, quickly went to 45, actually didn't even touch 45, and went into 57.5. And it did it in about 5 weeks. And then it came all the way back down, sure. But that's the nature of these type of stocks that are not named Apple or Amazon or any of these that have, tried and true earnings month over month, quarter over quarter. This one's pre-profitability. It's going to continue to see these ebbs and flows. And I'm not even saying that if you were to buy tomorrow at 1450, it would go to 57.5 over 5 weeks. That's not what I'm saying at all. What I am saying is this spot right here, if you were to get in somewhere again in the 14-15 zone, if you look up 4 to 6 months from now, you may be able to take out your investment for a double at 28. Say 14 to 28. 28 is coincidentally the 200-day moving average. Yearly VWAP is 35. So it's already a double to 35. But if you go 14 to 28, that's a double. Sell half. Now you've taken your initial investment out and you keep the last half on, and then maybe it goes to 45 and 60, months later or maybe years later, whatever the case is. But now you have a house trade that's free and clear. So the thought process here again, down here may provide a great opportunity for a snapback that over time might see 28, and that could be a double right there. So you're trying to play kind of this zone right there, and if during the crazy nutty times you can get that squeeze, then again have some of these targets out here to take advantage. So some thoughts on SPCE. Today's the first day we've broken 15 since the last time we broke 15 and rallied to 57.5. Big time stuff there out of this one, and again we could be looking at that bounce play pretty soon. So SPCE, that's Virgin Galactic, could be in play here down the road. Let's take a look now at, here's Roku. Let's talk Roku for a moment. Roku has sold off well beyond what I kind of thought could happen, at least initially. When we talked about it on that very day, it was a sell signal, outside reversal. It was a magnitude of day, as you can see right here, that was only really matched by the last time it was at that level and had the same magnitude of sell signal. And we had 3 key levels for our market distributions. So if we look at these levels here, you have that 480 market distribution or key level and 380. So you have a 100-point market distribution here. Then you have 280 to 380, another 100-point market distribution here and here and here and here. Well, we failed at 280 now, and we mentioned 240 might be the first opportunity here to watch for a rejection because 240 could double back to highs. When we saw it hit 240 that day, it just had no life, and instead we said, you know what, let's hold off, because if there's no life, are we about to make the move all the way across the next 100-point distribution? So if that's 280, there's 380, and the last time we went through that distribution was on the way up. Now we're going all the way back down within that range. So this is kind of similar to some of the other ones we talked about here, where when you go up through a market distribution and push out, as soon as you fail there, you tend to rotate back down, and when you do and you wipe out here, you tend to go back up, and now we're trading here. It's basically the Peloton idea as well, where it broke 80 here, it's dropping to 40, and now when it gets to 40, it may trade 80 and stay within that zone. This is the same deal. 180 to 175, right? 175 right there in that zone. 180 could be a great zone. That's the bottom of the key range. That is your 100 point distribution. That could be the next bounce back toward 280, and we stay in here for a while. Ultimately, we may rally and go to 380 back again, and now you've doubled. So from 180, let's clear that. From 180 back to value, current value on a VWAP basis, that's 360. There's your double right there. It also takes you from the quarterly low back to the mid, which is 280, and then back to the quarterly high and through it. Again, it looks like this thing is heading to 180, and that's incredible to say when you go back to what we talked about here. We mentioned this looks the part. It looks the part for a 280 play. It did it in a week, and I said if it can't hold 380, it goes to 280, and there it is. It broke, it held, and blah blah blah, and there it is. Incredible. I mean, this is a significant sell-off and meltdown, and market structure has been all over it for us. So 180 is going to be the level here to watch for Roku. 180 could give us ultimately a long-term target of 360 back, again, over the course of the next 6 to 8 months, maybe even faster, or maybe never. Nothing. It never says it has to go back to that point. Roku's had quite a bit of competition, and that competition is super fierce right now. I really liked Roku because they stirred it up the way they did their thing before, and we've seen the growth, but now people have caught up, and supply chain issues, the whole thing, you're seeing this hit. So again, even if it were to hit 180, it's not a home run to get to 360, but it is a good opportunity to give it a shot with proper risk in mind. So some thoughts on Roku, but 180 could still be ahead to the downside ahead. Another one here that I wanted to talk about is Beyond Meat. Wow, what a free fall for this one. Major selling pressure for Beyond Meat, and we're almost at all-time lows, which is incredible to say. Here's your key range, by the way, back then, and that set the edges for our market structure here recently. It went to the 50% and all the way back. I mean, this is erratic as all get out. Then it hit the 100%. So it hit the 100% here. If you look down, we are 1 day away from hitting the 1% at the downside. That's 64.84 today, closing 66.26. How much lower do we go? How much lower do we go? If you look at value here on a VPOC basis, it's 136. So last time in November when we talked about Beyond Meat, I said it doesn't look like it's doing what it should be doing here. I said let's hold off, and we wrote 68 as the entry because 68 you get a double to 136. That's 136. Today it hit 68 for the first time since we were here last month. Not only that, it drove through it and never had any kind of signs of juice. So that's the earliest, right? 68. But how much more do we go to the downside before it actually bounces? That's a double to the 136. This right here is 130. So you cut that in half, you got about 65. That's in play tomorrow morning. 65. 65 again is this 100% target. Do we finally bounce at 65 and rally back toward value? Does this ever come back to value? Or does it only come back and maybe fill the gap here at about 93? You know, where are we going with this thing? I think overall, again, some of these are getting to the point where it starts to make sense to at least get initial bids going, because again, when have you been able and how often have you been able to buy sub 70? Not very often. Just during the IPO, a couple days here, a couple of weeks here, and that's been it. Everything else has been well above 150 for much of the time, and even got up to 200 plus. So just to get a little bit of that move back up could be nice. So how far until we wipe out? It may not go much lower than 60 before we're bouncing here. So I would say, again, sub 68. Anything between 60 and 68 here on a great reaction. You want to perhaps wait for that major reaction day, and that's the day where, okay, the low is in, let's go ahead, and now you're working up. So this one could be a great play up ahead. Again, hit the level today, 68, which is the earliest spot, and now perhaps 60 to 65 might be a sweet spot here for a turnaround and a long-term bounce back play to 136. That's BYND. Let's talk a little EXPI real quickly. EXPI, one that we talked about last time around, I mentioned in November I mentioned 25 might be the ultimate level. Hold off for 25s. I said anything below 35 ultimately might be good. And today, closing below 35 for the first time in a while. Right now, this is a real estate company. Real estate, one of the worst performing industry groups on my board. It has Zillow, Open Door, and some of these others that have really over leveraged themselves. We're seeing quite a bit of selling pressure. This stock doesn't have that type of issue. Instead, it has a major growth phase here, and now it's kind of working its way back off of it. We talked last time that 25 ultimately might be a great level, as the upper end of the range has been 55. You can see that's the highs has been 55 each of the last 3 quarters. So if 55 is a good target on the upside for this thing, the earliest double would be 27.5. If you wait for a 25, you got a 50 target up here. How far do we go before this thing turns around? This is one that I really like for a longer term. This is something we said last time when it was here and it exploded to the upside. And we still have quite a bit of shares and continue to accumulate in this one as well. But I would like to see something down here at 25 still from kind of that longer term perspective. Looking at this from kind of a weekly chart perspective here. And one thing I'll do is take this off of quarterly pivots and move it to yearly. This might be the blueprint for next year. So if you're using the quarterly bands, you can increase them to yearly, and it'll give you the pivots, the PivotBoss pivots for the upcoming year. Right now, we are closing where? Below the pivot range for the year of the upcoming. So just like today that we're talking about with the monthly range, the first move up could be sold for a push downward to test this level. You come down here and test this level, there could be an opportunity to trap in here and now you return it to the midpoint right here, and you could stay in this lower edge and never even have to test anything up here, and you'll be good. So 25 would be the earliest right now on this one. I'm trying to be patient with it because I know how good the potential is, and we've already experienced that when it went from $8 to 180, and then it split 2 for 1 here. So it's had quite an amount of growth, but when I turn this on here, it's really pointing at a couple of levels here, 22 half, and then you have a rising 200 day, which is 17. That seems like a good trap and reverse up here. So again, 25 would be the earliest, but there might be an opportunity to trap below the previous quarter's low. So just updating some thoughts and on EXPI. Nothing really actionable right at the moment, but something that could continue to work into our actionable zone. So things like SPCE, right? Things like PTON, those are more actionable because it's coming into those zones very quickly. Something like this needs a little bit more time in the oven. Another one that I like here, and again, this could be here you go. So right here, this is NEO. I really like NEO for the next phase of movement, the next generation of EV. You know, that move and that growth, I think, could come out of NEO as well, and perhaps other Chinese EV automakers. But there's been quite a move in this group. EV group has been tremendous. We talked about last summer that they were likely due for a breakout, and Tesla broke out, Lucid broke out. This one didn't. This one kind of stayed compressed and has built a tremendous amount of energy. Again, like an EXPI, I think the yearly bands are going to be very important for these next quarter, where you know, if we drop down through this quarterly low, that could be enough to return it back to the midpoint, and you're kind of in here with a healthy gain. If it can push through here and break out through the top of that range, then man, we have an open field that takes us to 80 or 100 or beyond down the road. So I still like this one. The last time I believe we talked, we mentioned 30 as an entry, and to me that's still the case. 30, and I know I've said it all year long, and all year long it hasn't gotten 30. But with lower highs, maybe. And with this quarterly low or this yearly low coming in the view here early next quarter, maybe we get it. Maybe we get our 30, and that can get things going to the upside. Again, with something like this where you have tremendous growth, you want to have some sort of a plan where if you fill at 30 and then all of a sudden we're dropping and working our way to 20, what do you do? And that's a case, again, where I mentioned I would add back, improve cost basis, and still have that long-term look. Some stocks you can do that because you believe in the future and what they're doing, and maybe they're leaders in their group or whatever. Other stocks you may not want to add back. You know, you have to make that decision on a case-by-case. There's other times I wouldn't add back. I'm gonna give it this try, but if it can, it's probably a dog that just ain't going right now. So each one is a little different. I try to put stocks up here that even if they push through their key levels somewhat, as soon as you see that rejection of that key level, they tend to bounce back fairly quickly. We'll see if we get our test at 30 here in NEO. Another one here is DraftKings, DKNG. This one is a tremendous sell-off right now. We talked about this one in our trading room as one that could be a stay-at-home play, with all these COVID variants and all these other things going on. You're seeing, again, another rotation out of those casino resort stocks, travel, cruise lines, and things of that nature, right? And it's been happening for a while. This one's also sold off tremendously from the previous year's high. By the way, these are yearly pivots here. previous year's high, sold off. It's now through the previous year's midpoint and dropping. How much lower do we go before we bounce back? Again, this is one where maybe, and we don't have enough data here to work off of yet, but we're building that data. But seasonally speaking, does this thing tend to rally into some sports betting seasons and things of that nature? If that's the case, and we believe, say, some betting may pick up heading into the Super Bowl, which is February, heading into March Madness, which is, March, April, heading into whatever, then again, this wipeout phase could be good for a bounce back to value at some point. Value right now is 49. 50 is kind of that midpoint there. Can this thing make it back to 25 and bounce back to 50? We're in that tiny part of the profile here where it's really thin, and those are the best prices, but those are the bottom 3% of prices, and everything else is above it. Can we kind of push through those prices and see those levels? If so, this one might be due for a good bounce back. I would say right now it is tremendously selling off. You don't want to jump in front of it until that day where you see a tremendous reaction or bounce off a key level. Again, 25 below 30, 25 to 30 could be the bounce back toward VPOC on this one. So this one's not ready yet, but it's one that it's been so severely sold off here lately. If it can find a strong low in these cheap prices, we may get a bounce back toward value that coincides with kind of an increase of sports betting heading into those major points of the year. Maybe some thoughts there on DraftKings moving forward if we can get that reaction. Another one here is, well, this is match. Let's pull, is that right? Yeah. And we talked about match here. Wow, that's right on, Dwayne, too. 100% extension of the IPO impulse range, 74.38, very close to the top. And it's right at the midpoint now. Those IPO key ranges are incredible. And we've seen them work out great. It's just uncanny how it works out. This is match group. This is where we got to make, we got to see what the market's going to do at this point. One of the things about trading range markets that I love is that you bank on reversals most of the time, and you're only going to get one true breakout. So you're looking to fade, looking to fade, looking to fade, looking to fade, looking to trap, right? Looking to fade, looking to trap and fade at every turn, and you're only going to get one true breakout. But after 10 rotations, how much more fading do we get? You don't just fade forever. At some point, you got to break and go. Is that time coming? Have we broken 130 and are moving lower, say, to S3? Is this a major distribution phase after a super markup phase, and we got to mark down now? And how far do we mark down if that's the case? Some of these have already broken, and we've seen the tremendous moves, like Peloton at 80 right here, and it's dropping to 40. Do we need the same thing here? Does this thing need to break 130 and drop to 90? 90 would be that next major zone down below, and you're seeing a lot of these stocks make the move. Most of the time, I would say this is a fadeable opportunity, and here's why. We've sold off tremendously. Outside day down, big down day. We're over here closing below the previous session's low, below the previous month's low, all of that. If tomorrow we get some sort of MGR buy signal and price gaps above the mid, these late shorts could be left behind, and we could be bouncing from a short-term perspective. So whenever you're at a major CLVN, it's hard for me not to think trap in reverse. So I think from a short-term perspective, there still may be a pop back up. But man, if this thing really elongates away from 130 and can't get back above 130 soon, how much lower do we go? I think 100, maybe even 90 could be ahead for this one. This one's going to be interesting tomorrow. Can it close back above 130? That's going to be the big question for this one tomorrow. Okay, last thing here, and I failed to show the chart of this one here, and then I'll jump on some of the ones y'all have asked about. Lucid was part of that EV group idea we talked about during the summer. We had these things compressing here with the bands. This day was the only day it was below support and below S3 on a composite PivotBoss bands basis. That's the day I said, hey, 17 could double to 34 down the road. But if it gets above 30, it has a shot to go to 45 and maybe go beyond. Man, this thing has done that and then some. You see the breakout, you see the move. This is still a speculative chart, in my opinion. I you know, from what I've read and seen so far, and I've seen there's a Lucid, at least a showroom that I saw there in Houston here when I passed it up and went to the McLaren dealership. Lucid was right there. You know, again, good vehicles here that could play a role down the road, but until then, we might continue to see that Virgin Galactic type of move where, yeah, you went from 15 to 57.5 exactly like SPCE did, but where are we now? Today we're below 15, you know, in SPCE. This is the exact same move. You know, here's 15 bucks right there. That's 57.5. SPCE did the same thing. So while I like this one a lot, we had it as a buy candidate here. The goal at times is to get your double, take your initial investment out, allow the rest to work its way, but also take profits when the windfalls are there. Because with something like this, again, it's not Apple. It's not just going to keep on printing profits quarter over quarter. Instead, it's in the auto industry. It's the toughest there is in many cases. EV auto industry has to be even tougher. There's going to be ebbs and flows. So I'd be cautious on this one at these prices. But man, if it were to come back to market structure support of 30, you know, 30 again looks pretty good because it may go to 60. Great movement out of that one. So that was one we had on the board here recently, and right here when it made the initial move, we put that key range on it and said that there's a shot to see 60, and man, did it get close very quickly. Then those key ranges are great. All right, let's take a look at AMD. Thank you for your patience, by the way, Yushin. AMD, I was looking at this one a little bit earlier. Man, the growth this one is seeing is tremendous. I mean, it's quadrupled since 40. 40 was a zone that we talked, and this seems like so long ago now. I remember this initial rally here where it just said, I'm growing up. And it went toward about 60. We had that hardcore pullback, and from that level, it hit the 200. From that 40, we've quadrupled to 160 here, under 2 years. That's tremendous trajectory there out of this one. I'm not bearish this stock, but also you wouldn't expect it to continue to see that type of incredible ascent. Instead, what you may see now is perhaps range-bound price action. So when you get that big move, you digest. Big move, digest. Big move, digest. Big move, wide pivot range for next year. Do we digest? And then go again. So I like this one. I think there's still. I think this is the moment for chips. If you look at any of the chips spaces, that right now they're leading. You know, on my visual trader, no matter how you look at it, semiconductors are at or near the top every single time. Equipment, memory devices, whatever it might be. It is what it is. It's very, very strong. Is a chip shortage, that means the value goes up. All of the things, right? So if inflation continues to be a concern as well, that heading into the middle of next year, then again, this bodes well longer term. From a pure technical perspective, again, I think it's overdone itself here, going from 100 to 165. And if it is going to continue higher, this pullback to the pivot range, right? The pullback to the pivot range is the check mark buy. So in here, it may find a low and we may rally. Okay, so that could be it. But if we don't, or say we pull back and it could just kind of go flat because it's already done so much. It is the tendency of this type of stock. Look at the pivot range for next year. I think this one might have a rest phase with an upward bias. Meaning it's still trending up. But do we get a little bit of a pullback, lazy phase, and then go again? You know, that type of thing. In that case, you know, any pullback, say to 120, that could be an add back or a get in. You know, so you come back to the midpoint of this year's range, that might be enough to get this thing going next quarter or early next year. So I like it. Again, very short term, big sell-off day today. Do we find a low tomorrow? If so, there might be a little bit of a bounce back. But this one's kind of elongated itself in the near term. Another one here is Nvidia. Again, a great stock that just, I was looking at this one a little bit earlier. Tremendous growth out of this one. Just hit that 350 level, 347s basically. That's your 100% target. From where? I don't even know where that came. Oh yeah, it got moved off. I was about to say. This has been super growth as well, and again, for all the reasons I talked about in AMD, Nvidia is the same. A great time for chips right now, and overall this thing continues to show strength. The trajectory, 5G, all these various things. You know, you see things like Facebook, now Meta, that's going to be using virtual type of environments. You see EXPI, we talked about earlier, has that Verbella. You see other things that are moving that way, that the processing speed, the chips, they just all need to be top. So this is just going to continue to be such a great space. For all the reasons we mentioned, AMD might be in a holding pattern now. It's the same thing here. It's just very aggressive rally. There tends to be a pause. Look at the pivot range for next year. That's a tremendous pivot range width-wise. So there might be a hold pattern, build some energy, and go. And again, not saying we pull back all the way down to the previous year's midpoint, but market structure wise, you got to kind of rotate and fill that in somehow. So do we kind of do it in two passes? You know, you have that overall range, but you might have this upper portion and you have the lower portion. So maybe we go boopity boop, drop down, boopity boop, and then start to work our way up. However it is, it almost appears like that we have kind of reached a little bit of a portion where we need to go and digest a bit, but with an upward bias. These are so strong, I definitely wouldn't short them. If you're fortunate enough to see some sort of pullback, that could be an entry or re-entry. Very strong overall. Again, higher value relationship. We could easily pull back and bounce back to the highs and just stay within the range as well. So some thoughts on Nvidia there. Another one here is asking about the DXY. Great question there, RC. DXY has been one that has made its way higher. It has worked off of major market structure levels in an uncanny way, and even our quarterly and yearly pivots as well. So there's some key levels here that you'll see that have been on my chart for years. I haven't had to update these at all. That's your 88.5. That's your 92. That's your 95. What is this one? Whatever that one is, I think that's a 97 and change. It's obscured. And then I have the 100.5, and I don't think I have anything beyond that. But those are the major market distributions. To begin the year, look at the rejections and the defense here at the previous year's close and low, right here, right here, right here, and we bounce and rally, and look at where we are now. We are precisely at the midpoint. Is that precisely the midpoint? Yep, it sure is. So that's the midpoint right there, the previous month's range. That's almost how you draw it up right there. You know, you reject at the lows, you return to the month's mid, or the previous mid, and then from there, you know, can it make a move to the upper zone, or do we kind of hang out in here for a little while? So incredible movement off the yearly pivots, number one. But here's the thing that I'll say is that the market structure has been so incredible with this one that whenever it is able to re-establish acceptance back above market structure, it tends to go. And recently, it re-established above 95. So right, here's 92. As soon as it can come back above 92 and hold it, it goes to the next one, 95. As soon as it can get above 95 and hold it, it goes to 97 and change. So the fact that it got above 95s, I think 95 is now the key level to hold. Any pullback, even as deep as 95, likely to be defended, and you have a target at about 97.50 or whatever that level. Let me see what this dang level is. 97.70. 97.70 is that level right there. So 95 to 97.70 could be ahead, in which case we might see a little of this action and then make the move to the next distribution at some point down the road, which would be between 97.70 and 100.5. So this thing has clearly been strong, very bullish, higher value relationship month over month. Right now you're pulling back in the PIMA trigger zone, buy signal today, pivot range support. You know, just from a short-term perspective, this looks like it has a 1 to 5 day move higher toward 97s with a shot to see those 97.7s down the road. So still looking really good. This is not bad at all. Thanks for that one there, RC. Sam's asking about STNE. Wow. You know, until you see it happen, sometimes you just always think, wow, is it really, can it really go all the way back there? And, you know, the market never ceases to amaze. Yes, it can. And yes, it will. This is tremendous, the amount of weakness that this one has seen. But this is also about the time where after the bloodshed, you see, oh, you know, the upside could be good here, and then you see the banks start buying cheaper, investment, you know, folks start buying cheaper, and then all of a sudden this thing easily returns to value. This is heavily rotated over. I'm not quite sure. I'm not quite sure what led to the sell-off here, but looking at the news feed here over the last few days, we're seeing analyst targets up. So this one right here, for example, I know this is just a headline here, but this is the kind of thing that can move some of these prices. JP Morgan adjusts the profit target from 23 to 50. And that was just a couple of days ago, or yesterday. That was yesterday. You know, so let's take a look at this. And again, another one of those reasons where if you rally off 15 bucks and you get to 30, you know, take half off and you're playing with house money. If you want to be greedy, then leave it on and see if it can go double, triple, quadruple, or whatever. In this case, it went, you know, 20 bucks to 95. That's tremendous. Higher high failure, a rejection of the quarterly high, a rotation back to the midpoint, a failure at the mid, so you drop to the low. Man, that's how you draw it up with those PivotBoss pivots. And now we have it all to do again next year. You're at the lows of the year. Can we reject in here and return it back up? And if so, how far do we go? Value on a CVPOC basis, 34.40. Value on a falling VWAP basis is about 47, and that's also a CLVN. That's the top of value here at 46 on the composite. How far can we go? I would say, based on what we've seen, if you reject at this high, you go back to the midpoint. That's a high odds target in many cases on a rejection. So if you reject here, your midpoint is 55, 54.94 is that midpoint, and look at that market structure level. Man, is it beautiful. That's the breakdown point. 55 could be that target from a long-term basis, right? Remember, if these are yearly pivots and you're rejecting here, then you got to give it the year to go there, right? So this is an active investment. It's not just a swing idea that plays out over the next week. We're at 15 bucks right now. It's basically all-time lows. It's never hit a lower price. No one has ever gotten a lower price than this. But it could still go lower. Okay? So keep that in mind. It can still go to 10. It can still go to 5. It can still go to 1 or to 0. So whatever you put in, again, don't bet the farm on something like this. You want to do it appropriately. That makes that falls in line with your goals and your risk tolerance and all that. But I like a rejection. Even if you got in right now and say, I'm going to buy tomorrow at 15 or whatever, just to get back to 30 would be a double there, and you can just take that off and just let it do what it's going to do. At some point, it may get to 55 and have that sell target ready to go. But this, when something's this heavily rotated back against its major range, I'm not expecting it to go way back up here. What you want it to do is just come back to the top of the most recent range. So if this is the range and this is the top of the recent range and we fell back below and now we're back at the bottom of that range, then just take me to the top. And right there, that's a triple. 15 to 45 is a triple. So I would say for this one, you know, it looks like it's worth a shot to get going back toward 30 and 45. That's a good one right there. Thanks for bringing that up, Sam. A lot of good ones here today with a lot of potential. You know, this is a case here where do we get more downside selling pressure up ahead, or do we start to see, you know, some sort of rebound? For something like this that's sold off all year, I would think that the market's ready to start fresh next year and get this thing going back up. So yeah, that looks like a good opportunity. Thanks for bringing that to the room there. All right, everyone. Well, we've made this one an extra large supersize edition, an hour and 20 plus minutes. Again, thank you very much for joining me here today. Always my pleasure. I'll post the recording as soon as possible. Again, a lot of great opportunities here that could play out nicely over the course of the coming month and into Q1 of next year. Have a fantastic rest of your evening, and I'll see you soon. Take care.